Well, Apple, Microsoft, Alphabet all reported yesterday after the bell. They posted strong numbers, but we're seeing mixed reactions in those stocks, as you just got a little preview of there from Joe. So joining us now on how to play these big tech names and the trades there, Stephanie Link, Chief Investment Strategist at Hightower, and CNBC contributor, and Greg Branch, Managing Partner at Veritas Financial. Good morning to you both. Greg, I'll start with you.
Good morning.
Given the fact that we did just get reports from 3 of the 5 largest mega cap tech names, your takeaways, perhaps not surprising to see huge earnings beats and strong revenue growth, but what does the future hold, and how is that affecting the stocks right now?
Yeah, it was not surprising. We expected to see strong second quarters. In fact, I expect to see strong third quarters. What it's collectively done, I think, is put to rest the narrative that what we saw last year in the last couple of quarters from these companies was COVID bump or COVID pull through. In fact, when you take them together, we see that we are in a very strong IT spending cycle. We see that we're in a very strong transition to cloud cycle. We see that we're in a very strong digital advertising cycle. Even where I was looking for something to quibble with on margins, for example, where I thought that they might be reinvesting in headcount and operating margins might come in a bit, they surprised on the upside even there, with some pushing out, like Google, who said that the margins would come in, but Microsoft surprisingly saying that there's even more leverage. So it's very little to quibble with at the top end, where we're seeing a pivot to enterprise in the Microsofts of the world, and where digital advertising, search, and cloud all having very strong secular tailwinds. The one I do have some concern about is Apple. Apple, we saw growth in China decelerate there, and we also may see those ASPs come down, and it's trading pretty rich at 28 times forward.
Yeah, I want to get into that more in just a second. But Stephanie, I want to get your thoughts on the numbers we've gotten and what Greg just said as well, your reaction to that, this idea that maybe perhaps this stay-at-home trade or the thought that this was a stay-at-home trade for some of these names, that maybe it has more legs even as we potentially come out of this pandemic. Do you agree?
Yeah, I mean, clearly these numbers are just blow away across the board. I think that Alphabet is the most impressive in that operating leverage was so substantial. They had the best operating margin since 2012 at the first quarter. So while I'm happy to see 62% revenue growth and search up 62% and cloud up 54%, it's the margins that really matter, because this has been the issue for Alphabet over many, many years. They couldn't get the operating leverage. So it's very exciting news, even though the stock is up 55%. I clearly was nervous headed into the quarter, just given the rise that it's had. But that one actually is very impressive. In terms of Apple, I think the story is very much intact. Maybe the stock pauses for a little bit, but every single metric beat. And the total revenue up 36%, beat by 11%. Products, which is 78% of total revenue, up 38%. I know the stock is down a little bit because services, they're saying it's not sustainable at 33%, but I'll take 20% any day in terms of services. I think that's a sustainable number for the long term. So I think that Apple pauses. Google can continue to ride higher. I just think, those are the two that I like. I prefer over Microsoft.
Yeah, Greg, I mean, one of the other things I've seen pointed to for the pressure on Apple shares pre-market right now is the fact that it didn't actually issue guidance, despite the fact that we did have such a strong quarter. So how do you dig through, whether it's these 3 companies that we're talking about now or some of the other names in tech and other industries even, how do you dig through and sort of decipher how important the guidance is versus the numbers we're getting for this quarter, especially as we have had this debate about whether it's peak earnings?
Right. Well, in Apple's case, they certainly got into enough when they talked about the growth decelerating from what we saw in this quarter. Mm-hmm. And I think that's one of the reasons you're seeing weakness. I don't think, other than on the margins, I don't think we saw anything that surprised us. I was above consensus, and you guys know I've been saying for a while now that consensus was underestimating the earnings power of these companies. But when we have margin guidance or at least growth guidance that is counter to what we're seeing now, and albeit some of that on component shortages, not necessarily anything within the business's control, but there were some other items of concern there. But what we're looking for is secular stories here, and I think that these companies are showing, with the magnitude of the beats, with the guidance that suggests that this strength can continue over the next couple of quarters of difficult compares, that there's real secular tailwinds at work here.
Yeah, Stephanie, this stat that the 5 big tech stocks, Apple, Microsoft, Alphabet, Amazon, and Facebook, now comprise 23% of the S&P 500. I mean, is this the place investors really need to continue to be right now, or are there other opportunities as we do see the major averages hover near record highs?
Yeah, I think you want to have some exposure for sure. I mean, Apple in my benchmark in the S&P 500 is 6%. So you got to be careful, though, right? I mean, because that's a big percentage if you only have, like I do, 44 names in my portfolio. But I think you definitely want to have some of these companies with the secular tailwinds really substantially higher in terms of digital advertising, travel search, cloud, 5G. These are all trends that are not going away anytime soon. So you want to pick your spots. You want, like I said, if Apple pauses for a while, maybe that becomes more interesting because numbers are going higher. And oh, by the way, they generated $19 billion in free cash flow in the quarter. They have $72 billion in net cash and bought back $23 billion in the quarter. So you've got that as your support as well. So I think you just want to pick your spots, though, Morgan.
All right. Well, Greg, thank you for joining us. And Stephanie, thank you. I know you're going to join us again a little bit later in this hour as we do get some more earnings names this morning.
All right, coming up, it could be the most